Hello everybody, it's me the Boss Hog and we're back with another portfolio update and a general life update as of the 13th of October. This isn't clickbait, I actually sold quite a lot of semiconductor position. I'm just going to basically walk through some logic as to why, as well as other things that have been happening in my portfolio. Let's do it. Alright, so first of all, in terms of changes since we last had a video, it has been 2 weeks, typical excuse of work, but we are going to do a catch up over the last 2 weeks. Not a ton of changes, honestly. 2 dividends received. The first one from DLR technically came into my account right at the very end of September, but I'm reporting it into October here just because that's how I report it into my wife's work, which I have to do. And also it aligns nicely with the sale, with the buy, which I've just basically gone back into DLR. So nice and easy one there. MPW is a bit different though, and I decided, I guess, to sort of ring fence any potential exposure I have to MPW, and my strategy going forward is to keep my holding, but I'm basically going to start reinvesting any dividends elsewhere, so to limit myself from that perspective. I still don't really want to sell into rush into a sale. I still think it's got upside. I still think the sentiment is overdone, but we will see. Anyway, let's get into the juicy stuff, which, as you can see here, I've basically sold just under $3,000 worth of my semiconductor ETF. If I'm honest, I haven't been in this for that long, and my overall profit here is literally a couple of quid. You might ask why, and I guess I've got a couple of reasons for it, but the big two are probably like, I wanted to redeploy it first of all into things that I think are slightly undervalued. And this ETF is expensive, it's up to date with its kind of net asset value, and from that perspective. But actually, the second reason is really because like the distribution of the holdings in this ETF, and I've sort of, got them on the thumbnail for the big five in this. I just realized quite recently that I had a very big position in Nvidia, especially just by virtue of holding it in several different funds, even though I don't actually have it in my, in my portfolio at all. ASML I do have, and then my other big one is Amcor, so I'm not selling those at the moment. But ASML likewise is another like top five here, and I just also thought that basically semiconductors in general at the moment just taking a lot longer to bounce back than I think consensus was a year ago even. And to be honest with you, I feel pretty much the same. Like I think I was probably in line with consensus for semiconductors this year. I sort of thought, H1 would be difficult, and then H2 is starting to see some bounce back. But a few months ago I sold Micron at about 68, I think it was, because of the fact I was pretty underwhelmed, and also there was some like political risk, and I'm very sensitive to political risk, having been burnt with my Russian miners last year. So all that aside, I've decided to sort of exit my semiconductor position for now. This did sit in my personal ISA instead of my wife's, and I guess in the future I may well sort of put 40 to 80 quid a week into my wife's ISA and kind of use this as an opportunity to transfer it over. But if I do build a stake in semiconductors, and I remain sort of reasonably positive about them in the long run, it's going to be sort of over time. I'm not going to sort of take a big position immediately, unless, of course, there's some sort of event that represents an opportunity to get into it. So, yeah, I've not held this for too long, but I just decided to sort of sell it down over about a week or so period. And my overall profit was, I say a couple of quid, it was about 20 quid. But honestly, a sort of very small percentage here. I mean, it's probably done better than my portfolio over the last few months. So I guess from that perspective, it was a good buy, a good place to put $3,000 for a couple of months. But yeah, I decided to sell. Those are basically my reasons at this moment in time. Now, where did the money go? So I haven't added any new capital. So with the exception of the dividends that we spoke about, everything in the middle here for the buys are basically where I put my money from the semiconductor sale. So first of all, I decided to buy another 500 in banks. Now this might raise some eyebrows. For me, I'm really pleased to be buying underneath $4. I got this at 382 and kind of got the most recent opposite of peak trow, I guess, quite recently. So I was very happy with this. And then when I saw the results from, like the majors in America, I was even more happy because honestly, I thought the financial numbers from like Citi, Wells, JP Morgan were solid. So really good. Now this ETF is basically 1/3 majors and 2/3 minors, all US, regionals and majors over there. And for me, again, I continue to take the position that this sector is a bit underloved at the moment. Like, I think actually it's a pretty sweet time to be in banking. You know, you've got very strong net interest margins, you've got pretty stable economy. Yeah, definitely spending, etc., is under pressure, but so far, like, the resiliency has held up pretty well, I think. And you know, things like US inflation that are sort of like making life difficult in Europe more generally, in the UK particularly. It's not to the same degree because, you know, like the US sort of produces its own energy, and just has a different sort of dynamic around that as well. And plus, I think the central bank in the US acted a lot more boldly and sooner to sort of limit some of the damage that was coming through. So a different situation there as well. So I sort of expect that US markets will hold up better. And although obviously there was a couple of banks in the US that fell over, I don't believe that that was because of systemic issues, rather individual banks just sort of getting their risk um, profile all wrong, basically. So I remain pretty committed to this. This did increase my position quite materially, honestly, and I'm very happy with it. So that's my rationale there. Next up, we've got Fidelity Special Values here, and you'll see I've done this across a couple of buys. I'm more or less flat on this position. I think I'm down like 1% even after a pretty bad Friday. Um, I mean, it pretty much does what it says on the tin, really. But just to explain it a little bit more, it's sort of UK focused value shares. So I think it's a pretty interesting looking ETF. It's about a 5% discount to its net asset value, which to me is always a good time to buy an ETF, to be frank. And I sort of am just looking to build my position in both this and the ETF we'll get to shortly, in terms of sort of both quality and value with UK focus. I do think UK shares are a bit underloved at the moment. There are maybe one or two good reasons for it, but one or two quite bad reasons. And yeah, I'm trying to take the long term view basically. And so I'm happy to be buying these positions. I'm sort of wanting to get both to about 5% of my portfolio, so they'll end up relatively big positions within it. Currently, they're only about 2.5, so I'm looking to sort of double it over the next many months actually, because I can't add any more capital to this ISA until April, but we'll do it when we can. Next up, then, just going down this list, is probably an interesting one because I've spoken about this before and I've had one share in it for quite a while, which is basically my consumer staples ETF. I've never really loved this ETF and never really had a massive position in it. I think the largest I ever was at was about £600. Now I'm at about 130. This was sort of a mixture of one or two of the consumer staples putting out reasonable results, I would say. I do like one or two of the top 10 holdings as well, like Procter and Gamble. I think it's quite expensive. I like Costco. I think Pepsi's okay as well. So I just decided that even though this is sort of like trading at its net asset value, that actually like consumer staples were starting to hold up. It's never going to sort of excite me, but in the interest of trying to have a reasonably diversified portfolio, I just sort of saw it as an opportunity to diversify a little bit and maybe start adding some funds into it. So I'm only ever going to buy this when I'm in the red. When I bought this, I was down about 1%, but it was on like one share, so it doesn't really matter. And since I bought this, it's already gone down again. So that's the nature of these things, I suppose. But yeah, so I will be adding to this, but very slowly and only if the mood sort of suits me and there's nothing else to buy. Next up, we've got Frogmorton Trust. If Fidelity Special Values is about values, Frogmorton's about quality. One of its larger positions got bought a couple of months ago, which was Decra Pharmaceuticals. But you know, I think there are a lot of actually buying targets within this ETF. There is a little bit of overlap because it has large positions in both Games Workshop and Gamma Communications. So two of my larger positions, although I have reduced Games Workshop a little bit. Still, though, there's a lot to like in this. It's also trading at about 5% discount to its net asset value. And similarly with Fidelity, these are my two sort of like ETFs that I'm looking to balance in terms of UK focused quality and UK focused value. So my thinking there. I would just say with the global mining, again, I'm pretty flat on this overall. I bought a lot in the past, so I've got a reasonable position in this now. And I didn't really feel the need to add to it at sort of what was essentially flat. So I decided to only put the dividend into it and then just sort of focus into the buying that we've just walked through there. So that's all of the changes I've been doing over the last couple of weeks. Hopefully it makes sense, or it might not, in which case let me know either way, I suppose. But that's my thought process for it anyway. Outside of that, though, let's see how the rest of the portfolio is performing. All right, so again, in terms of how things are looking, it's pretty standard, I would say. I did actually record my week close last week, even though I didn't have time to do a video, so we do have that. To be fair, on the week it was pretty flat, and until Friday I was actually having a pretty decent week before Friday was just dreadful. So that sort of pulled me down a couple of thousand. The last one I would have recorded would have been this one, the 144600. So from that perspective, it's down 2 grand. And everything sort of mirrors that. A little bit of dividends that we touched on, a small profit here. You can see the £20 from the semiconductor ETF sales, and what that ultimately meant was that my P&L has gone down since the last time you saw it, although slightly improved week on week. So that's how this is looking now. In fairness, I'm almost at the point where I'll be able to do year-on-year comparisons, but because I've not been doing a weekly video all the time, I'm going to sort of revisit this table and basically put in the weeks that I've missed, even if it's just to sort of copy the one above it, so then I can have a true how we're doing compared to a year ago. Excuse me, that's going to be one of the changes we look to make for next week. Portfolio value is not yet at an all-time high. I am hoping in the near future, either because the market will recover and or because we'll be adding more capital more regularly, that we'll start to see an improvement here. And speaking of, I expect to add a couple of thousand additional capital when I get paid on the 20th. And then we'll start making it a fairly regular thing in order to complete my wife's ISA for the end of the tax year. So sort of early April officially, but I look at it at the end of March. In terms of how we're performing against the benchmarks, it's been a really interesting year for benchmarks. You can see the blue line here, it's like all over the place. So sometimes I've been on top, sometimes not. I've definitely lost ground over the last couple of months. You can sort of see I was ahead, or at least challenging the S&P 500. Now it's all kind of got a lot more condensed, and you know, the all world is recovering a little bit. The FTSE 350 just continues to sort of plug along at its sort of standard pace. So you know, bear markets it outperforms, bull market it underperforms, and you know, the S&P is sort of going all over the place a little bit as well. So that's again disappointing, but it is we're keeping an eye on it. Similarly as well with the profit graph over time, like when this was first happening, I mean, this is a certain war, right? That's what that is, and then all of these kind of like, you know, runs, I sort of, it's weird, and this is going to sound really bad, but I'm almost kind of numb to it now. Like, it doesn't actually bother me, especially when my portfolio is in profit anyway. Like, why am I sweating for? But to be honest, even when it's under, I think the only time that I really follow it particularly closely is when it's literally hovering around zero and it's like, oh, this is exciting, right? It's plus or below. Obviously, I wish this was a lot higher, and you can sort of see the first like 13, 14 months here were very and it's crazy as well, you know, like looking back, like I remember feeling these at the time, these felt like huge drops. But having been through this and, you know, several other sort of pullbacks, I sort of feel quite, numb. I suppose if I wanted to pick a better word, it might be sort of immune, or just used to it, to be honest. Again, I think maybe a better word might also be like sanguine, like I'm sort of relatively used to the ups and downs by now. But yeah, it's definitely been an interesting time. No major changes here because obviously we've just been... well, actually, I guess there are a few, not right at the very top, but when we scroll down, we will see some changes in position. I will just say Phoenix had a pretty good week. I'm not really sure why this is. I do think Phoenix at the moment is really cheap. So I can't wait to get my dividend from them, I think next week or the week after, because it will be quite sizable. It'll be like a £270 dividend. I'm just going to chuck it straight back into Phoenix. So actually, I'd like it to stay nice and cheap, at least for a couple more weeks, just so I can continue. I will just call out, banks we've already spoken about here. And then, now that we've got rid of our position in our semiconductors. So this was, I mean, it was honestly like in the middle of our position, middle of our portfolio. So it's strange to see it go. But again, I may well revisit this. I don't think there's anything wrong with the ETF. I used to be a bit more against it when it was unbelievably NVIDIA heavy. It has sort of reduced its exposure. But still, I think it's still a useful sector to be in, despite the fact I've sold out of it for the reasons we've already discussed. So honestly, not a huge update there. I will also say, seeing as I'm going to be updating my week closes as well, that I haven't actually revisited my ETF breakdown for many months, and it's possible that some of the ETFs that were quite marginal before have since changed. Like I remember looking at the S&P small cap one I have, and I think that currently sits in industrials, but it's super close between the like top 3 positions. And basically, the way that I break this out, just to be super clear in terms of the method, is I have my ETFs right now actually make up a pretty significant slice here. And then I look at the top sector in each ETF, and that's not like super clever where I'm sort of scraping it off of a website somewhere. No, I just basically went in, looked at the holdings, and then there's always like a sector summary on the ETF. So it's very crude and basic. Some of the ETFs kind of speak for themselves. If it's like a semiconductor ETF or like a banks ETF, right? It's going to be financials and tech. Um, some of them are a lot more not what you'd expect. And like I did make a change to Scottish Mortgage Investment Trust sort of a few weeks ago, and that's really the reason why this big red chunk exists over here. Because actually, despite SMT being seen as a tech ETF, it's actually not its largest slice at all by a reasonable margin. So I'm going to make a couple of updates to this between the next couple of weeks, but until then, that's broadly speaking how it's looking. And yeah, I do generally feel that sort of week on week, especially, and this is just looking literally back 7 days, not a huge amount of change, and any changes that there have been sort of even each other out. But if you look at the last sort of month and indeed 3 months here, you can see an awful lot of red that we're currently trying to navigate. So yeah, how am I feeling? I guess this is a good time to ask. I'm feeling still okay. I'm actually kind of hoping that the market will sort of stabilize around here, just because I'm about to start adding capital again. Of course, I actually feel like either direction I'd also be fine with. If it goes down, then I'll just get more excited about buying and feel sad about the fact that my portfolio has gone down. If it goes up, then I'll be sad about buying, but excited because the portfolio has gone out. So maybe that's the right way to think about it. There'll be a reason to be grumpy and happy, regardless of what it does. So that's the end of my sort of financial update. Let's have a look at my life update next. All right, as fair warning, I do feel like my voice is starting to go, which is a bit unexpected because it kind of felt okay before I started doing the video. So let's see if we can make it through this. In terms of contribution to wealth, just a modest change, I guess, although it's still sort of £800. This is a combination of my wife's pension contribution arriving. My wife's pension always gets paid in sort of the earlier part of the month. So that came in, which is awesome. And then £100 into my daughter's ISA. So that's the contribution there. My pension hasn't arrived yet. And again, we haven't made any changes to our ISA capital contribution. So I do expect this to change again over the next couple of weeks for those two reasons. In terms of total wealth, unfortunately, it's gone back a little bit, quite substantially, in fact, although only sort of 2% on the scheme of things. This is somewhat expected just because we're in the middle of the month, right? So this is after all of our costs have gone out, and our costs are not trivial between sort of mortgage and school fees and one or two other things. So we have had sort of £5 worth of costs go out, which is not insignificant. And then on top of that, neither of us have been paid yet. So next time we do this, there'll be a kind of an increase in the amount just by virtue of me being paid. But there has also been a challenging market. We're still down a couple of grand in the month to date, and basically a combination of those two things explains that. The total wealth at the end of the month here of 400k. I mean, that's been the case for the end of the last 3 months, so we're sort of static from that perspective. And again, we're just sort of trying to navigate that as best as we can. I do sort of have a laugh because whenever I feel like I share a screenshot of like hitting a milestone with Discord, I feel like fate seems to punish me. So the next time I'm going to share sort of an update for like a position I hold doing well or something, you should probably all look to sell because that's probably an indication it's about to get a bit rough. But again, at the moment, we're trying not to feel bad about it and just sort of roll with the punches, basically. In terms of everything else, so again, we're going to same order as before. In terms of outstanding stuff at work, so implementing my new systems, I would say has been going relatively well. The migration stuff is definitely progressing really well. Now I've been personally overseeing sort of the mapping, how data is going to be sort of converted between systems. There's a big migration piece as well, where we're reducing the number of build cycles we're doing just because we have too many at the moment, really. So that's all intense, but actually super fun, and I really enjoy that kind of stuff, getting involved in the nitty-gritty bits. There have been some challenges with my payment integration, but actually I had a really good IT call halfway through the week where like timelines were way better in terms of like implementations than I was expecting, so that made me feel really positive. And we do now have sort of a workaround for any gaps that we have as well, and even those are less extreme than I was fearing, so that made me feel good. And likewise, I've got a new debt process, which should hopefully make it a little bit more human and a little bit more consistent. And I ran it past sort of the final member of my exco on Friday, and honestly, it seemed to go really well. Probably the best session I've ever had with him, so that felt really positive for me because I don't always have the easiest relationship with commercial people. Finance and commercial people never play nicely together. And in fairness, they shouldn't. They have different aims and different challenges. But importantly, that you can actually have those conversations when needed, right? And to be fair, like when we're dealing with debt, it's something that can very easily upset his customers. So it's important to get that over the line as well. So to be fair, I mean, I've put some challenges here, but actually, I would have felt a bit differently a week ago about this point. Like actually, the week just gone, calendar wise, has been constructive, so that feels good. No change in revenue assurance targets, but again, this is expected. There's not going to be a ton of change for the next couple of months as we work through various things. PTC, propensity to contact reduction. So I have a weekly call basically, and I had quite a few actions from my last weekly call in terms of sort of trying to get some timelines and sort of measure the impact that changes will have. That was not the easiest conversation I've had to have, just because I left with like so many action points, but I've spent the last week sort of gathering information and putting that together. So making some solid progress as part of that. So we'll see how I'm going to do an update on Monday. We'll see how that goes, but I'm feeling positive about that for now. Team organisation. So I finally got my budget accepted. I've literally lost count of the number of versions I've done, 13, 14 maybe. By accepted, that means that it's been approved by my boss, the CFO. He's also been getting budgets from a couple of other people in his team, and then he'll basically take the overall financial position to Exco and discuss it with them. So may well come back to me to make some tweaks, but that for now at least that should be behind me. So honestly, that's really good. And then reporting improvements, no change week on week. There have been some reporting improvements, but they've all been focused in like other work streams, like the migration stuff actually. So no change in terms of the end-to-end sort of basically provisioning to collection journey that this really relates to. So outside of work, we're into fitness and well-being. So in terms of gym, I'll basically workouts. I only did 3 instead of 4, basically, that this period should cover. So not perfect, but in fairness, I'm kind of okay with that. They were also on the lighter side, but I wanted to sort of keep some initiative, which again, I was quite pleased I was able to do. So even though in a way, like, it's weird, maybe it's just my mental at the moment, but I viewed this as a relatively good achievement, even though officially I fell short of my target, like considering how disruptive a few things have been in my life over September and into early October. This felt pretty good. Weight's unchanged. Also as well, maybe because things have started to improve in terms of stability and routine and Boss Hog family household, like regularity of sleep, hygiene, just taking care of myself more generally, of things like, scrubs or making sure I do my teeth. Again, that may or may not sound ridiculous. I do realise as a grown man, I shouldn't have to celebrate the fact that I'm sort of taking care of myself, but it's so easy to like get, or at least for me, it's so easy to sort of have other priorities or just forget or not put enough care into looking after yourself, right? So I think it kind of forces me to keep myself honest, I guess, which is really the whole purpose of this channel. So it is what it is. So relationships, wife and daughter. Honestly, this has been a huge improvement over the last 2 weeks. I sort of mentioned like some challenges, but it's just like my daughter's been going to nursery for like well over 2 years. So we thought that when she went to like a big school, that it would be more or less the same. In fact, it's fewer hours. So honestly, we thought it would be easier. But I guess, when you're still little, it's a major change. So just everything. Like she hadn't been eating as well, hadn't been going to the toilet as well, hadn't been sleeping as well. And that like knocks onto everything. So, we put in some incentives and they've been really successful basically. And, but I mean, really basic things, honestly, like if she doesn't have an accident and she's careful at school, and, we get good feedback from the teacher, she gets an ice lolly when she gets home, she's so excited about it. It's like, well, this is really easy, right? It's so easy to like bribe, blackmail, incentivize a small child. And, it's not just about giving her things. It's also making sure, she feels like safe and that she understands that she's doing a good job. And, like we had our first teachers meeting, and just sort of making sure that we're sort of aligned. with what's happening there. So that feels like, honestly, this is such a big improvement over the last 2 weeks, because it's sort of been wearing my wife and me down. Um, I would say my wife is also incredibly busy at work at the moment. Like, she's definitely due a promotion and a pay rise, so hopefully she'll get that in a couple of months. She has been having prep calls with her boss, and he's said some nice things. So we're sort of it's set expectations for something quite sizable. So I will share that when I know it. But again, even that my wife is sort of gradually getting on top of, so that feels good as well. And now they've both gone to Poland for a couple of weeks, where my wife is from. For me, this is my wife and I were both joking that we're kind of like both really looking forward to some time to ourselves. Like, I mean, don't get me wrong, I really enjoy my family, but sometimes like I just want to be a bachelor, and I'm really looking forward to the next kind of week by myself. And then I actually fly out to Moldova, where I have a team, so I'm going to spend sort of the second week toward the end of October out in Moldova, so that should be good fun. But the next week I'm a bachelor, so that should be great. I'm arranging another visit to see my other sister. It's her partner's 40th, so that's all the justification we need. So we're going to go down, probably just by myself. I mean, yeah, it's going to be in early October, early November, so technically my family will be back. But I imagine it'll just be me, because it's probably going to be on the heavier side, but it should be good. No catch up with friends really. I do have a couple of like LinkedIn things I probably need to get to. I might make a bit of an effort over the next week to make sure I don't leave people hanging. I did also have a catch up with somebody, basically building a network, I guess, but one of these kind of companies that organises get-togethers and chats with C-suite people. I'm kind of on the super junior kind of, just like, the guy's just thinking, whether I'll be somebody that he needs to keep in contact with. But it was a friendly introductory chat, and I guess we'll see if it goes anywhere. Don't know. In terms of other development, regular YouTube videos, again, this is still very much a work in progress. But I am working on, but actually a cash flow forecast, just because my budget video was quite well received and seemed to generate quite a lot of interest. So I thought maybe, and I don't know how many people are broadly aware of this, but before I got into telecoms, which I've spent my career, I was training to be a financial advisor. So when it comes to things like budgets and cash flow statements and things like that, I am quite comfortable talking about them. Not a professional. I never got formal certification from what was then the CII, who were regulating it at the time. But I do enjoy these kind of things, and again, people seem to enjoy hearing about them. So I will. I'm basically working on a deep dive for the end of the month, where we're really having a look at our cash flow and breaking it down into a bit more detail. So that should be fun. I've also there's one more thing as well. I've started to work on a detailed video for SMT, Scottish Mortgage Investment Trust. So I expect to have that out next week. And I don't even expect that to be delayed, because I'm a bachelor. So that's something for everyone to look forward to. SMT is now comfortably my largest position and accounts for sort of about 17% of my investment portfolio. So I want to kind of explain why I'm so bullish and I keep buying, basically. In terms of studying Polish, again, there is still some effort between my wife, me, and my daughter to sort of speak a bit more Polish around the house. Certainly before they flew out, for the last few days, we've been speaking, and I've been trying to listen and speak some Polish, so that's been good fun. But I think maybe it might be nice to give my wife like a bit of a surprise and see if I can organise some formal study, and we'll go from there. But yeah, because I think the structure, like I think I mentioned before, but a few years back I did actually have formal structure, and it really propelled my Polish more than anything, and I think that would be good to sort of start thinking about that again. Publish a story. This one I'm really disappointed about, because basically all I needed to do here was kind of tap up a few people to basically help with some illustrations, but I haven't actually got around to doing that yet. So it's not even very much work. It just sort of slipped my mind in the scheme of things. So this gets a frowny face, and we'll try and reach out to those people shortly. And then in terms of regular reading, I did actually buy a new book on the history of the Roman Empire, actually from somebody who I had a couple of lectures from when I was at uni. I'm actually a massive nerd about the Roman Empire, and actually even more so about the Byzantium Empire. But this one is about sort of the 3rd century crisis, which is a very colourful period of Roman history. So, I mean, it's a pretty chunky book. You could definitely use it to like hit someone with. And I think it's going to be quite funny, just because, this period, the Roman Empire goes through about 60 different empires, and or like you have situations where like the crown gets auctioned off in one case, someone's dog ends up on the throne in another case. Just honestly silliness and degeneracy as it sort of spirals out of control. So that should be kind of light reading, but again, it's a serious academic book. I haven't read anything on the Roman Empire for several years. So I'm really looking forward to that, actually. And again, I expect I'll be doing some proper reading over the next week or so when time allows. So that's everything from me. I don't think I have anything else to say. I'm just racking my brain. My voice is just about holding up. But honestly, I think that's everything for now anyway. So if you made it this far, thank you very much for doing so. And for everyone else who didn't, I guess you missed out. But thank you very much for watching, everyone. Good luck with everything. Bye for now.